What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're diving deep into harmonic technical analysis and what lies ahead for the markets in the upcoming week. It's a packed schedule with some game-changing economic data, so we're going to break down what each points are. So first, we got retail sales. This is a key indicator for consumer spending. This gives us insights into the health of the economy. We also have building permits, which is a forward-looking measure for housing market activity. This is always a vital piece of the puzzle. Then, the spotlight next week will be on the FOMC interest rate decision, along with the release of the FOMC economic projections. This is going to give us clarity on the Fed's future policy path, and we also can't forget about Chair Powell's press conference, where he's going to set the tone, and this tone is going to give us information on whether the Fed is going to continue raising rates, cutting rates, or even pausing rates, which could cause some volatility in the markets. Then, towards the end of the week, we're also going to be getting GDP data. This is the ultimate measure of economic growth, which is going to tell us how the country is performing. And finally, to end the week on Friday, we do also have PCE, better known as the personal consumption expenditures. This is one of the Fed's preferred inflation metric. This is going to give us a read on price stability, which could cause some expectations for potential rate changes. So make sure to stick around as we explore how these events could impact potential price action. So don't forget to like this video if you find it helpful, drop a comment with your thoughts, and subscribe to stay updated with future videos. Before I get into the charts, I want to preface by saying I'm not a financial advisor. None of the things I say in my videos is ever financial advice, so question everything, do your own research, and come out with your own conclusions. Having said that, let's jump right into those charts. Jumping over to SPY here. So SPY on Friday closed at 604.21. We did start to pick up on some volume to the downside. We don't have any harmonic pattern currently being formed here. This obviously hasn't validated the ABCD pattern as it continued to push higher, but there are some harmonics here on the larger time frame. Specifically, I'm just going to go over here really quick through the 3-day chart to show you what that pattern is. And this is a deep crab. As you can tell here, deep crab is calling for hop there at 618.44 for a potential type 1 reaction down the line at 503.88. So right now we'll be looking at the 3-day here to see what indicators are telling us harmonically here. So the HSI is approaching about that midline, and that midline could be tested around the 9 EMA, whereas you could tell that it finds support here just when it comes and tests, and that could be around 599 and change there, roughly where point D was created there at 600. So you can call it 599 to 600 is where you can find support, the 9 EMA. And if it fails that, you can see that it likes to hold above the 21 EMA. It has come down to test all the way up to 50, but that was back in August. And ever since then, it has found support above the 21 EMA, which is around 587. Below that, then you could start maybe your move for the type 1 reaction towards target 1. And you have 561 at XA, the HSI dot retail line at 552, and then you could look for target 1, 503.88 for that type 1 reaction. But obviously, that's on the 3-day chart. That could take a while to play out. If we go over to the weekly here, you can see that the HSI is approaching that midline. It is curling down. If I zoom in here really quick, you can see that it is coming down towards that HSI midline. And they did close on the weekly with increasing volume, just slight increased volume compared to last week with an inside bar. So if it continues to the downside here, I'd be looking towards like that $598 to $600 range. Ultimately coming down below that will be a test of the 9 EMA on the weekly at 593.55. And as you can tell that the weekly finds support on the 21. If it gets really bearish, if the data gets bearish for next week, then maybe you could start looking for 575 down the line. This is obviously on the weekly chart. In my opinion here, though, I do think we're going to enter a consolidation phase here for data. We have a lot of data that comes out this week. So some of the things I'm going to be looking at will be that $600 range to that 604, 605 range. Basically a $5 range, in my opinion. That's where price action may be pinned until we get more data. Obviously, we're waiting for FOMC on Wednesday. We're waiting for a Powell press conference the same day, and then you have GDP on Thursday and PCE on Friday. So we could consolidate up until Wednesday, and then we'll see what GDP and PCE have to say about that after the press conference. But I want to talk about Monday and Tuesday here, because on Monday you did have increase in volume to the downside from Monday to Tuesday. And on Wednesday, you did find some support there, and you tried to break above that HSI dot retest line, which is around 607, and ultimately failed. And then to Thursday to Friday to end the week, you also had increase in volume. So volume is starting to step up here. It's going to be important to see what SPY is going to do here with the data. I think we'll get more price action as well, because we've been kind of consolidating around this $5 or $7 range. But targets to the downside, like I said, I'll be looking towards a 21 EMA as a level of support. You can see the last time it broke down to that level there, it did find support and then created that higher high. So you could come down to the 21 EMA, which is around 600, 599, 600. You have some price action there. You have that support there, a PT3 from the previous harmonic target. The HSI is approaching the oversold conditions, and that could be around the 21 EMA, maybe even just slightly lower, wicks down and find support. Ultimately, if that fails, then you have the 50 EMA SMA as a level of support, which is around 589, 590. As you can tell, the last time it came down here, it also came and created that higher low, and then it pushed for that higher high. So it's going to be interesting to see what SPY does here. Obviously, we're going to be depending on data, so definitely keep your eyes on the SPY. Jumping over to the triple Qs here. So the triple Qs currently has this bearish butterfly pattern that formed here back on December the 16th at point D here, which was above XA. And it did try to close above XA towards a push up towards hop right now. But right now we did close on Friday with that indecision candle, which was off of high volume. So in volume to price analysis, when you have an indecision candle at the bottom of the trend or the top of the trend, it could be showing signs of potential reversal incoming. So this is a high volume candle. At the top of the trend, this could just created a higher high. This could be indication that a potential reversal is incoming. We obviously have to wait for confirmation to see maybe 1 or 2 more days, but right now you're still breaking above XA with 3 candle closes above. So by that, you maybe you're looking for the 4th, 5th candle close above XA to maybe signal that it's going to hop. But that indecision should show some signs of, hey, pause, well, hold on, we have to wait. Maybe they're waiting on data, and you can still trade between that XA and then hop. If we're looking at the HSI midline did come back below that midline, and then ultimately on Friday did start to curl up to retest it. So we're going to see what happens there. If you do come down, and the next level I would be looking at would be the XA retest there at 525.14, and then more so where you dropped here below the 90 EMA, which is around 519, 520. There is a gap to fill at 517 and change. Let me just draw this really quick here. So below XA, you would be looking towards that gap fill, which is around 517 and change, where the 21 EMA is now as support. So you would fill that gap. Below that, then you would obviously be looking to come down here all the way to 503.52, where the 50 SMA and EMA are at. And then you do have more gaps to fill to the downside. But right now, obviously, this indecision candle, this doji candle, is telling you that maybe a reversal is incoming, or a pause, or more consolidation is going to take place. Here, the triple Qs compared to the SPY had actually decent buying pressure, right? On Wednesday, you did high volume, had high buying on Wednesday, and you ultimately closed above to create a new all-time high. And then on Friday, you had low volume, but still managed to close above XA. And then on Friday, you had high volume indecision candle. So there's a lot more buying here on the triple Qs than on SPY. More specifically, the indice here on the triple Qs, the Nasdaq is strong, meaning tech is strong and is leading the way. We obviously saw some blue chips pushing for new all-time highs, Tesla, Apple, to name a few, and as well as Meta. So we're going to see if there's going to be continuation for tech here, or a pause in tech, especially after some of those blue chips did move up, are starting to maybe consolidate here, or going to be retracing a little bit back to give some of those gains. Obviously, there's still the semiconductors that are leading the way right now for the triple Qs or tech in general not to continue pushing, as we did have the semiconductors drop quite a bit this week. So we're going to see maybe that's the reason why we had that indecision candle. We don't know yet. Obviously, we're going to wait for the data to give us maybe a hint of where we are going. If we go over to the weekly, you do have an ABCD pattern here. That ABCD pattern, you did complete the type 1, or excuse me, the type 2 return to hop there at 529.73, and you ultimately closed above it. So the HSI on the weekly bounced off the midline here, and you're looking towards that next level, maybe to the overbought conditions or the extreme overbought conditions on the HSI, which could mean that the triple Qs can continue pushing much higher. I do think there is a target up here, if I'm not mistaken. Yes, 537 on the daily. Like I said, 537.15. And then this, I know there's a black swan pattern that played out already. That played out basically as more than 30 bar rule there, but PT3 here is at 553 for the new all-time high there. If you compare it to SPY already hit its PT3, and also the Dow Jones. The triple Qs has yet to hit this area, but above 537, this could quite literally continue pushing to the upside. We could figure out if there's any confluence here. If we take a fair retracement from the previous all-time highs to where it retraced here, you can see that the next level would be the 1618, which is calling around that PT3 at 552.77. So continuation with bullish sentiment this upcoming week with bullish data, and tech leading the way and being strong and holding above here. This can see at the end of the month, potentially, if we had a Santa rally and everything, this plays out seasonality wise, you can see maybe the triple Q is continuing its upwards trajectories. But right now, in my opinion, I do think we're going to be stuck here around that 530 to 525 range until data is released. So definitely keep a close eye out on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones has been getting some volume to the downside. Obviously, a loss of 21 EMA now for 2 days in a row, and it did close on Friday at 439.37. The HSI is completely oversold here, and we are looking for a potential reversal here harmonically. So that could be towards that 437, maybe even all the way down to CD at 433. We are looking for a reversal candle to give us an indication that the Dow Jones is going to reverse. Right now, you could tell this is an upwards channel that created a higher high and is now maybe coming for a higher low to test some previous levels. It usually likes to come down to test that 50 EMA SMA there, as you could tell back in early November. And you also had another attempt at September, and in August you came down below it. Never came down to the 200, but you did manage to close and make a higher high. And then ultimately after that, you've just been creating higher highs and higher lows above the 50 SMA. So we could still come back down here. You're obviously looking for a level of support here at 437, which could take the SMAs to get closer up there the longer we go into the week without falling too much. If we go over here to the weekly, we can see that volume did increase to the sell side, and on the weekly you did cross below that HSI midline off of increase in volume. So you do have level of support there around the 13 EMA, where that HSI dot retest line is around 432. Below that, then you have HOP at 422. In my opinion, right now, I think the Dow Jones is completely oversold, and I do think reversal may be incoming here, but I am looking for this to hold around 437 to 441 to the upside targets that we need to get it back above for the Dow Jones to maybe indicate that this is coming back for a potential higher high, is to reclaim 440, 441, and then come back up to 443, and then this HSI dot retest line at 448 and change, and then we can see a potential new all-time high. The next level here I'm looking at, I do have a line here at 435.52 that it needs to hold below that. Then you can start maybe an attempt all the way down here to fill this gap here, all the way down to 422.62. I do expect some type of support here, a reversal candle we might be seeing here on the 2-hour time frame. I believe it was a 2-hour. Or excuse me, the 1-hour time frame is the one that I'm looking at here on the white swan. You did come below hop here, so if we can get indication here that this is going to start flipping, we'll be looking towards targets back up to PT3 at 445 down the line. So obviously one of the reasons why the Dow Jones is continuing to sell off here ever since the addition of NVIDIA into the Dow Jones. NVIDIA this week, and in general the whole semiconductor space right now is coming down quite significantly. So NVIDIA was one of those tickers as well that's in the Dow Jones that did not have a very good week. So we'll see if maybe NVIDIA finds a level of support somewhere on this charts, and then you can start maybe looking this for the Dow Jones to reverse. But definitely keep a close eye out on the Dow Jones. Jumping over to IWM here. So IWM also has this bearish butterfly pattern. It's also been getting quite the volume to the downside here. As you can see, it has been increasing all the way since the beginning of December. And you did have some bearish move here from losing XA from this harmonic pattern to 237 was key, and now you did close just slightly above BC there at 232.67. Just like the Dow Jones, IWM likes to hold support above the 50 since all the way back in October. It did lose it back in September and in in August. It ultimately always finds a higher high and then comes back for a higher low. So just like the Dow Jones, this could be coming for its higher low, and that could be towards the 50 SMA there. There's also a gap to fill there just slightly above 224.29 is where that gap fills, and then you do have, if you fill that gap, and you just come back all the way down to the type 1 reaction target 2 at 222.53. Right now the HSI did go to the extreme conditions here, but it still can go a little bit further down before it finds support or an indication of reversal incoming on the oscillator there. I do have a level of support there roughly around 230 and then maybe even 229 where the 50 SMA is at. You're also potentially getting a 921 crossover. One of the things I mentioned in our previous video, that anytime you have quite the selling volume come in after it makes a higher high on IWM like it did back here, right? There was no buying here, and then you found support, and then you made a higher high. You did it over here. You also did it over here where you had huge amounts of volume coming in to the sell side, found support, and then made that higher high. You did it over here as well, where it was very little buying here, only 2 days here during this whole, looks like 2-3 weeks, found support and made a higher high. So every time the IWM does this, you get some volume to pick up again. We're going to see if that's the case. Obviously, maybe IWM could benefit from the interest rate cuts, so we're going to see how much the federal rate cuts come in by, and if it does, maybe that could also be a sign that a reversal is incoming. If they get the 25 basis point cuts that everybody's expecting, maybe you could see a move to the upside. Two targets to the upside for IWM would be to hold above BC there at 232, get above 237, ultimately coming back above HOP. Above HOP, then we're looking towards that 248 to 250 target. So definitely keep a close eye out on the IWM. Jumping over to XLF here. So XLF on the daily, you close on Friday at 49.54. The banks have been a little bit bearish the past 2 weeks here. You did have a higher high, you had the HSI arrow, and now you're coming down here potentially much lower here. The HSI is completely oversold, but it doesn't mean it can't continue. Maybe something more macro is taking place roughly on the weekly. We'll be looking at here in just a second here, but you can now argue that this on the daily is a potential head and shoulders pattern where you are breaking below that neckline here, right? Just slightly below that neckline. So if you continue to the downside off of increasing volume, like you did get some increase in volume here on Friday, the next level I would be looking would be that 49.18, just slightly above OPR there. Below that, then you have the 50 SMA EMA as support there on 48.69, which is just the entrance to the gap. Losing that level, then you can come to CD there at 47.81, and then maybe to come down and fill that gap all the way at 46.73. Below you have 46.12 as a level of support, and then major key level down the line would be 45.07 should it get there. If we go over here really quick to the weekly, you can see that it formed a bearish scrap pattern at the completion of point D. Now you have 2 weeks in a row where it has come back down, and that XA is at 49.18, which is the same level I had drawn here at 49.18 off that horizontal line. So that's where the 90 EMA is at. Below that, then you obviously come down for a potential type 1 reaction all the way to target 1 at 43.20, but that is on the weekly chart, which could take some time to play out. One thing I want to mention here as level of support for XLF and XLF on the EMAs here, the next level it likes to test when it does lose, you know, the levels on the 9 and the 13. The 21 EMA has held support since it broke out of it back in November of last year. So you've only come down to test the 21 EMA. Every time you come down here, you do hold support. So that is also where the gap is almost filled at. So we're going to see if XLF manages to hold this level. Maybe it does manage to hold above 49.18. If it does, then you're looking for previous all-time high, which is at 51.62, and then hop there at 54.51. So definitely keep a close eye out on XLF. Jumping over to XLE here, the energy sector ETF. So you had some selling here come in here. Ultimately, you did close on the week at 89.22, and the volume here has been harmonic selling. The HSI is completely oversold. The RSI is also approaching the oversold condition. So what can we expect here harmonically? We don't have a harmonic here on the daily. You did manage to finally fill the gap that it had right here when it gapped up. So you do have a 2050 crossover strategy here that could mean you could continue still to the downside. So the next level I'd be looking at here would be target 2, maybe around 88, and maybe even to support here around 87 and change. If we go over here to the weekly, you can see, I know it's looks a little bit bearish here, but ultimately you're still in an upwards channel creating higher highs and higher lows. So if we could take from over here the a trend line and draw a couple touch points here, you can see that the next level of support would be towards 85, maybe even come down even lower, wick down, but ultimately it is still in an upwards channel, just kind of consolidating upwards. You did cross below the HSI midline, so you could come back down. If it decides to go to the oversold conditions here, that's losing this trend line, and that means I have it going towards 82.51. If it finds support above here, then you're looking back to create a higher high towards 101.52 down the line. You do have, by definition, those are 3 black crows, which means bearish continuation to the downside, so we're going to see if that is going to be the case. So levels of support here, again on the weekly, you do have a pattern here. Obviously this is validated because it's past 30 bars, but you can still use it as a level of support, which is calling around 83. I have a range more so between more macro between 101 and 82. You can get bearish below 82 and bullish above 101. Otherwise, you're just going to be trading in this kind of range here for XLE. So obviously there may be geopolitical issues going on, but we'll see what data has to say about that this week. So definitely keep a close eye on XLE. Jumping over to Apple here. So Apple, no current harmonic target, but Apple has just been going crazy to the upside here. Obviously for the week it did go as high as 250.80, but wasn't able to close above 250, and on Friday you managed to close to end the week at 248.13 with an also indecision candle at the top of the trend. You did form a hanging man there on Wednesday with an HSI arrow, but ultimately still managed to close above it, above that previous close on Wednesday. So what can we expect here? Some of the targets I am looking at here, if Apple decides to break above this 248 range, the next fib ratio I have will be the $262 range there. I believe that is a target from taking the previous all-time high here to the retracement there, the 1618. It's exactly at that line there at 262.71. So that would be the next level I'd be looking up for Apple. Apple has just been getting a lot of buying pressure here, but it is finding resistance at that 248.48. Below that, I do have another line there at support at 242.22 should it come down here. The HSI is about to test that midline, and that midline could be just slightly where the 90 EMA is at, around 245. If we go over to the weekly here, the weekly, you could just see the amounts of strong volume just coming in, right? There's a lot of buying volume here, and the HSI on the weekly, I know it's kind of crazy to say, but it did cross the midline and it hasn't reached the overbought conditions, and that can be, like I said, where that drawing is there around 262.71. The MACD flip green, obviously you want to see when the MACD flips green, you want to have confirmation to see if the momentum is actually shifting, and the momentum has already been shifting, creating higher highs and higher lows. So the MACD is also saying signs of potential continuation here. Obviously very strong buying volume here. We're going to see if it continues towards that 262. I know it's getting very close for Apple to reach that $4 trillion market cap. So we're going to see at the end of the year how Apple performs and if it gets there. So definitely keep a close eye on Apple. Jumping over to Microsoft here. So Microsoft mentioned in my previous video that it looked very bullish for a reversal, and exactly already 2 weeks into this was a lot of buying pressure, and you did finally break above where that triple top was at right here and here. And once you broke around that 433 range, you continued to push higher all the way to 456, ultimately coming back down on Friday to close at 447.27. So you did form that HSI arrow here off of buying pressure, right? And you continued into Thursday higher. So right now you're still, that HSI arrow to me at least is not showing any signs of reversal just yet. You do need the volume to step up. Friday you did come down here, but you're still holding above hop there. So you want to lose hop there, maybe come back down to 438. Then maybe you come and do the breakout retest of that 433 range. If you find support there, then maybe you're looking for a higher high down the line. Right now the HSI is approaching around that midline, and that could be towards that XA 438 that I would be looking at. If we go over to the weekly here, you can see that this is an inverted hammer candle. This is a potential W formation. A W formation in harmonics means that it is a bearish harmonic, but you're looking at a potential leg D push back to the upside to create that point D, to create whatever pattern is potentially formed. It could be a D crack, could be a bat, butterfly, whatever it is, but you would need to make a higher high first, and that could be towards the previous all-time high of 468 before a reverse. So obviously this is on the weekly chart. It could take some time to play out. The weekly HSI did cross the midline, and it is approaching the overbought conditions, but has plenty of more upside before it actually is overbought. So targets to the downside I'm looking at now for potentially this week would be around a range here that I've drawn at 457.26 to 433, where it could come back down here, maybe just consolidate here above this range, and then wait to see if the data is bullish. A break above 457, in my opinion, this starts looking very bullish, and you can start looking at these upside targets here. You have PT1 at 468, and then $500, basically $499.80, basically $500 should it manage to hold support above here. You're in a range, as you could tell. The last time you broke above 433, you came up here, had some little bit of resistance around the 457, similar to what your dad had over here. But when you broke above it, you created that new all-time high, came all the way below that 457, found support here at 433, tried to hold, and then you know, this is where you failed, and you had this range where now you're breaking above it. So you want to see a healthy retest. As long as Microsoft holds support above 433, and you'll be looking for a potential opportunity for a break of that 457 to send it again for a potential all-time high. So definitely keep a close eye out on Microsoft. Jumping over to Amazon here. So Amazon on the daily currently has this ABCD pattern that formed at the completion of point D here. You did have an HSI arrow on December the 10th, and then you did form the HSI dot, basically doing a check back of the previous HSI arrow. So this is where it's going to be important for Amazon to hold this level as support, because if it doesn't, then maybe it's on its way for a potential type 1 reaction to target 1 at 213.05. The HSI is approaching that midline, and that could be just slightly where the 90 MA is at, around 223 and change. Obviously below that, losing that level, that could start its descent for that type 1 reaction towards target 1. You do also have a gap to fill around 214.02, just slightly below the 21 EMA. Losing that level, then you come back down for another gap fill, which is around 208 and change, and then the type 1 reaction, full type 1 reaction, could be all the way to target 2 at 201.84, where the 50 SMA is at. Obviously, you're looking for those levels. If you do cross that midline off of increase in volume, you can start looking for the oversold conditions towards that T1 and maybe even lower. To the upside though, if it does find support here from the previous check back of that HSI arrow that formed here on Tuesday, December 10th, then you're looking for hop there at 232.15 to retest and then create a new all-time high. So right now, obviously, Amazon has been on quite the run as well. It created a higher high here, higher low, and now it created a higher high. So we're going to see if it's actually going to be on its way to create the higher low or continue finding support here and then continue pushing on its way up for new all-time highs. So definitely keep a close eye out on Amazon. Gosh damn Tesla. Well, what can I say about Tesla? Tesla just here ripping in the markets here. I'm going to bring up my drawings. So all I have are fib ratios here. There's no current harmonic pattern on the daily. So what can we expect here? Friday, you obviously pushed all-time highs. It went as high as 436.30, closing the day at 436.23. You did form an HSI arrow to the downside. Obviously, it was completely oversold on the RSI, HSI, and the amplified RSI. So right now, the next level I'd be looking at would be more upside. I do have a ratio there at 463.54. If we go over here really quick to, I believe the 3-day is where you had this bearish Gartley pattern. You can see that it held support above XA, broke out, and went to hop there at 428.68. So right now the HSI, the amplified RSI, and the regular RSI are completely overbought, but it just looks like it's in a squeeze right now towards that 463.54. If we go over here to the weekly, I know it's oversold on the 3-day, but the weekly says a different story. The RSI is overbought, amplified as well, but the HSI still has plenty of room before the overbought conditions, the extreme overbought conditions on the HSI, and that could be towards that 463.54. If we go over to the monthly here, I just wanted to quickly share. I brought this to stream earlier this week. Tesla is forming a W formation. You know, obviously a double bottom here. A double bottom is a breakout point to the upside, breaking that neckline, which would have been here, and that is what it's currently doing. But ultimately, a W formation in harmonics is known as a bearish pattern because you would extend to the level point D, and then you would expect a reversal for a type 1 reaction for target 1 and then target 2. So I did draw a ABCD pattern here, and I believe this is the crab pattern. These are the rules that follow the crab pattern. So this is calling for potential point D here down the line towards that 559, 560 range. It could be much lower. It could be where it's at right now. The start of the D crab is actually on the 1618, so it can be here all the way up to the 2618. So this is where Tesla could continue going, maybe even on a bullish breakout towards the end of the month. Seasonality, Santa rally, bullish data. Obviously, Tesla stands to benefit off of interest rate cuts. So we're going to see if Tesla has more continuation to the upside, because on the monthly, it did reach the overbought conditions, but not the extreme. And as you can tell, it has tested the extremes back in 2017 and also in 2020. So right now, Tesla looks very bullish here, breaking out to new all-time highs. Very excited for this. I also wanted to see maybe if the HPC indicator is also giving me that pending or that potential pattern here on the, oh, there it is. So we have confirmation here that this is right. The start could be over here, the 2167, or it can go all the way up to here, which is where I had it more to 2618 here. So obviously it would be more towards 560. But this is saying that this could be, obviously this level up the top here would be hop. It would not be the pattern that it would extend to, because the pattern here extends to 2896, which just invalidates the pattern. Or it could, but I'd be looking more towards that 560 range. But it's good to see that the indicator is also calling for potential. Right? It does not mean that the pattern has formed. Maybe it tops out before 560 or wherever it's saying here at around $600. Maybe it tops out before, but there is a potential pending pattern here for Tesla. So it's going to be interesting to see what Tesla does here moving forward towards the end of the year, because right now it's in a bullish breakout. It obviously broke above previous all-time highs with strength to begin with. So there's a lot of strength here in the past 2 months on Tesla. So definitely keep a close eye out on Tesla. Jumping over to Google here. So Google, mentioned in my previous video, hopefully people paid attention, that Google was waiting for a breakout to the upside, and boy did Google break out to the upside. It went as high as 195.61 before closing on Friday at 189.82. Obviously the level that I mentioned in my previous video to watch out for if it broke above was that 168, 170 range, and that's exactly what it did last week, and then it continued here for higher highs. It created a new all-time high, wasn't able to hold, and obviously right now we did form an HSI arrow off of a shooting star. So the next level to the downside here, just to see maybe a retest here, would be hop at 185.60. Below that, then you do have the retest line check here at 181.54, and then you do have a gap to fill here all the way down to 176.26. So the HSI did form, and you are coming down. We're going to see if that hop level holds as support. If not, then we're looking for maybe these targets to the downside. Obviously, we still have some time to see if that's going to play out. We're going to be waiting on data. Levels to the upside here, I'd be looking at for this to hold support or create a new range here around the 180s, right? 180 as a level of support, maybe build a new volume range profile around 185, find support, and then break above 193 and make a new all-time high on Google. If we go over, I believe it's a 3-day, if I'm not mistaken. No, the weekly. So I'm sure, I think the weekly and the monthly have two patterns. So the weekly here has this ABCD pattern where it didn't go to 197.59, but it got close, 195.61, and you can see the amount of buying pressure that came in on this week. A lot of volume, right? The HSI is not even anywhere close to the overbought conditions. It actually found support above the HSI midline. So if this decides to go even higher, we could take a fib retracement from the point D it was generating here from the pattern to where it retraced right here. So that's calling for the 1272 above the 100% retracement, which is a previous all-time high, would be 1272, and then 1618 around 219.27. It's interesting here that Google on the monthly has the same pattern here, calling for hop at 197.59, and on the monthly here, you are approaching that HSI midline. So kind of a big deal here. We'll see if this holds support here for Google, because if it breaks above that 193, 197 range, then you are looking for a probably psychological level at 200 and above. So definitely keep a close eye out on Google. Jumping over to Meta here. So Meta currently has this bearish dragon pattern on the daily. It did go as high for the week as high as 638.40, ultimately closing the week on Friday at 620.35, where you did form an HSI dot, basically also doing a check back of the previous HSI arrow here back on Monday, the 9th here. So we're going to see if Meta actually is saying that this is a potential reversal here back down. So targets to the downside I'd be looking at would be OPR again, which is at 614.22. Below that you have BC there at 598, and you have this dot retest line here at 592. Below that, then you can come back down as level of support at 567. Obviously, that's a little bit too far ahead of ourselves. So as data comes in, we're going to see if this is actually going to hold. The HSI did cross the midline on Friday. It was increased in volume from Thursday into Friday, and you do have the dividend day. We'll see if that plays a part this week. On the weekly, if we go over here, that is a picture perfect indecision candle, doji candle on the weekly, so at the top of the trend, right? So this looks like a higher high, and maybe it comes down for a higher low. We're obviously going to see where that higher low is at. OPR here would be at 577. You can see that the 21 EMA has held support pretty well for Meta ever since all the way back since it broke above it here. See, last time it came down here was October last year, and then you had a support level here back again in April of this year, again towards July, August, came down here in September, and then back down here to test in November. So Meta, very strong support above the 21 EMA on the weekly. So if it's come back down to test the weekly 21, that's around 558. Obviously, the longer this takes to play out, the higher that 21 EMA will go down the line towards the end of the year. The HSI did cross the midline, so this could continue pushing for Meta into a potential higher high. If we go over to the monthly here, you can see so far in the month, you did cross above the HSI midline. You are completely overbought. You did have this bearish divergence, but this could also almost be invalidating here. If it goes back above the RSI above 79, it would invalidate that bullish divergence, meaning Meta could continue pushing to the upside. One thing I wanted to share real quick, which is crazy, Meta, finding support here back from October 22. They're at the lows being at 88.09. This went all the way back up to where it's at right now, right? The highest, it went up to 624%. So if we take a fair retracement from the previous all-time high to when it actually came down at its lows there, you can see where it's currently finding support, which is at 567.41. So if this continues, I know this is crazy to say, but the 2618 would be 863 down the line here on Meta. That would be obviously a squeeze level, but we'll see. This is why it's important. This 567.41, which has held support above it, right? Ever since you broke above it back in September, you held support above it, right? You did come down on it on October, where it almost came down to that 550 range, but ultimately on November reclaimed that level, and now you're holding as support. So breakout, retest, closed above, so that is a confirmation of a bullish breakout above a key level there at the 1618. So maybe it establishes a range here for support in the 600s, because right now it is strong. As you can see, when it came down here to test 567, it held quite well. So targets of downside where you can get bearish on Meta is if you lose again 567, and more specifically here that 550, you could be looking at downward targets, but obviously we're too far out there for these targets, so we'll see what data brings. So definitely keep a close eye on Meta. Jumping over to Netflix here, so Netflix, no current harmonic on the daily. You can see this is also just creating higher highs and higher lows. Ultimately, you did go as high on Wednesday, 941.75 for a new all-time high there for Netflix, and right now you're struggling a little bit around 921.35. That is a level to watch out for. If you break above 921.35, then you'll be looking towards 1,033.65 for the next level here. Based on the monthly black swan pattern here, we're very strong on Netflix with continuation to the upside of the RSI. I know it's overbought here, but you are looking for more upside based on the HSI that has still more room to the upside before the overbought condition. So right now, the level I will be looking at here would be a break above 921. The times it breaks above 921, it held it here pretty well, but ultimately came down here just slightly off of decreasing volume. You managed to close above on Wednesday above it, and now you had Thursday into Friday, you had some downwards action there. Weren't able to hold above the HSI dot retest line, but still getting some volume to the upside. The volume here quite low compared to this previous candle on Wednesday, so we're going to see if this actually manages to push back above 921, where you can get bullish to retest for a new all-time high. The HSI on the daily is going to the oversold condition, so right now maybe you do consolidate around that range. You can see where you had this doji candle here on the 5th and as well as on the 10th, and now on Friday the 13th, you have some level of support here around that 911 range. So if you find support here where that 13 EMA is at, you're looking to consolidate and wait for data to come out and see if you're either going to reject. You can come back down below these levels at 13 EMA at 906, the 21 EMA there on 888, and then ultimately a level there I have at 847.40. If you break with good data, then you're looking for a break of 921, retest of all-time highs at 941, and continue on its way to the $1,000 target. So definitely keep a close eye out on Netflix. Jumping over to NVDA here. So NVIDIA and the semiconductor space in general, the sector, is having some bearish movements to the downside. Volume is starting to pick up as well on NVIDIA. So we do have this bearish C-crab as well as this white swan pattern. The white swan pattern is calling for a major extreme level there at PT3 at 121. And then the D-crab is calling for a target 2 similar to the same target at PT3 at 120.79. Right now you are finding support at that T1 there at 133.05 as I bring up my drawings. The level I'd be looking at to see if it continues to the downside is this 132.66. As you can tell, the last few times it came to break above the previous all-time high, you weren't able to hold that level, came down here in the range between 132 and 120, tried to break above here around 132, failed, and ultimately you were in this channel here after you came to break up above it, failed, broke up above it, finally broke above 132 range in October. You created a new all-time high, came down, found support at 132, tried to break above 144, and you did, and then you ultimately couldn't hold at 144, tried an attempt again for 154, failed, and now you're finding support twice here for it looks like a double bottom here on NVIDIA. You're also potentially forming a W formation, just like Tesla. Like I said, you would create a level up here, which could be towards that OPR there, or towards that XA, and even hop there for the type 2 return to hop. So very key level here for NVIDIA in my opinion. That volume did come back up quite significantly on Friday to the sell side, right? It's a lot of volume that came in compared to Wednesday and Thursday off a decrease in volume, and volume did step up from Thursday up until Tuesday. You had increase in selling pressure, so very key level here for NVIDIA. If this doesn't hold, then the next level I'm going to be looking at would be towards my range here, towards back down to 120. You do have an HSI dot retest line around 121. The HSI did cross the midline, and it's right now on its way down potentially for the oversold extreme conditions, and those oversold extreme conditions could be towards that T2, maybe even the gap fill that it has there around 119. If it manages to hold support and data is bullish and the whole market wants to continue pushing up here, then the next level I'd be looking at would be PT2 here, to reclaim first the 50 EMA there at 137, 138. Basically where PT2 is at, you reclaim that, get back above the HSI dot retest line around 142, and ultimately break 144 to get bullish again to go up towards that 154.57 where OPR is at. Right now you could also argue that this is potentially a bull flag right here, right? This would be the pull and this would be the flag. So you are creating lower lows and lower highs. So this is a big deal here, because if you are coming down for a lower low, you will create a lower low from this previous lower low and come back down anywhere between its current close on Friday to PT2, maybe even the gap fill there at 120. So definitely be paying attention to what NVIDIA is going to be doing right now, because the semiconductors, I know tech in general is pretty strong, but NVIDIA and the semiconductors are struggling up here. They're tottering back and forth, and they're kind of stopping the tech sector from continuing, basically the NASDAQ from continuing pushing higher, and even the SPY as well. So I'm going to be it's going to be very important to see. I'm going to be paying close attention on NVIDIA here, because this level here fails, and you can get some bearish reaction on the indices as well. So definitely keep a close eye out on NVIDIA. Jumping over to Bitcoin here. So Bitcoin on the daily, this is as of Sunday, is at 105,780. So 105K. This is a new all-time high for Bitcoin. The HSI across the midline after finding support. It did come down here several times around 96, maybe even got low here towards this week around 94 and change, 94K. Ultimately finding support above hop still and continuing towards its descent towards 100K plus. If we go over here, there's currently no harmonic. This bearish crab pattern obviously is continuing to push to the upside, which is potentially validating that pattern. On the 2-day, you had another crab obviously above that, and then right here you don't have any harmonic patterns on the weekly as of yet. Maybe there are some forming here. This could have also argued here really quick that this was a cup and handle here on the weekly. So levels that I have here are based off of previous all-time highs on Bitcoin to the retracement that it has. Two retracements we'll be going over here. So the first one would be the previous all-time high, which was at 69,000, and its most recent downtrend here where it was at 15,476. As you can tell, this clearly broke above the 618, which was calling 102,077. clearly breaking up above that. I know the next level here would be the 2618, which is at 155,000. But we could take another fair retracement from the most recent swing high to swing low that just happened recently, and that's over here back in March, to this retracement where it came down to 49K. The next level you broke above here was the 1618, which is around 89K. The 2618 is calling for 113,866. Obviously, this being at 105, it's not that far off from that range. So that's the next level I will be looking at for Bitcoin. HSI cross the midline. This has way more upside if it goes to the overbought conditions like it did here back in March, and as well as back in March of 2021. Coincidentally, that's March, right? March cycle runs, when crypto in general gets to go for its bull cycle, and then it starts to come for a descent back down. So if this is repeating the same cycle, then March, you can continue pushing all the way up until March. You'd be looking above 113K. Then you have that 155K down the line. Targets to the upside or to the downside right now. If you get rejected here, around 113K, or even now, obviously you're in new price discovery, trying to see maybe establish a range where you can hold as support. The next level I'd probably be looking at would be towards like 101, 100K, the 90 MA. You do have a few levels of support here, right, where you did manage to, break above now, right? So you can come back down to 101K right there where you did wake up, weren't able to break above it, and you finally broke above it just today, and then you're managing to stay above that line. So below that line, then maybe you could look at targets to the downside, back all the way to 98K, and then hop being your level of major level of support. Below that, then you can be looking for targets to the downside potentially down the line. But right now, Bitcoin, in my opinion, continues on its way potentially towards that 113K. But watch 113K, and then watch 101 for the bearish side move. If you lose that, you can get a little bit more bearish, but right now, in my opinion, Bitcoin is strong, so definitely keep a close eye out on Bitcoin. So that's all I have for you guys. I will be streaming same time as always. If you're interested in watching me stream, I do stream live over on Twitch for market open to market close, Monday to Friday. So link to my Twitch in the description box below. Having said that, I hope you guys have a good rest of your Sunday, and I will see you guys tomorrow. Take care, everybody, and peace.